Hi everyone, this is a video lecture for week 1. In this video lecture, we are going to review a problem that involves some measures, some formulas, some concepts you may have learned before. Okay, if you forget most of them, that's fine because we're going to review those concepts, formulas in this video lecture. I hope you will enjoy this problem and get some ideas and remember something you have learned before. The idea here is basically this auditor has some missing records due to fire, okay, due to whatever problem they have. So this auditor would like to come up with some missing data or find those numbers based on available records in this table. You can see that. So we have A, B, C, D. So there are two different cases. So the question is, how can we find those numbers, those missing records, okay, based on left available information. If you look at A, basically we're looking at cost of goods sold. Okay, so this is kind of an interesting thing. If you look at the cost of goods sold, let me come to this Excel work paper so that it's easy for me to type and say at the same time. So if you look at the cost of goods sold, sometimes we use CGS. There are two places, two formulas at least you can think about involving the CGS. So first of all is if you use say revenues, okay, minus the cost of goods sold, then this formula will give you the gross margin. Okay, let me get back to the slide that we have here. Okay, the gross margin. Okay. So in the second formula involved in CGS is you have a beginning inventory of finished goods. Okay, then you have cost of goods manufactured. Okay, cost of goods manufactured. Then you have ending inventory. Sorry, let me make a correction here for this E. I think I should put I here. The B dot I dot means beginning inventory. Then you have the ending inventory, okay, of finished goods. Okay. So if you add the beginning inventory of finished goods to cost of goods manufactured, then you have so-called goods available for sale. Then subtract any inventory, then the result is CGS. So these are the two places at least you can think of using CGS. So we're going to go back to the slide, especially the left available data, to find out do we have any of those values. Can we use one of those two formulas to find CGS? Alright, so let's come back to the slide. If you look at slide here, here's a cost of goods sold, which is A here. Okay, let's look at the easy formula that we can use. If you know revenues, if you know CGS, you know gross margin, any two out of three, you can find the third one. So I'm going to look for revenues. Okay, it's right here, 48,000. If I look for gross margin, I have a 16,950. So it seems like if I use the first formula, I should be able to find a CGS. Okay, so I'm going to do that. So in this case, the CGS, okay, equals revenues minus gross margin. Okay. So the revenue value we have is 48,000. Okay. The gross margin is 16,950. So I'm going to put 16,950. Okay. So if you do the math, okay, so we can have 48,000 minus 16,950. Okay. So this CGS is 31,050. So that's the answer A. So I'm going to put A here to mark that. Alright, so let's look at part B. Part B says finish the goods inventory. Okay, so if you look at the case 1, we're looking at from January 1st all the way to December 31st. So this finished goods inventory actually is ending inventory. So we have any inventory here. Okay, that's called a finished goods inventory. So if you look at the finished goods inventory and you go back to so if you look at the finished goods and inventory, so there are one place basically we can have a formula for that. So let me go back to this Excel worksheet. So if you look at ending inventory of finished goods, okay, so the formula we normally can use to include this ending inventory is you have a beginning inventory of finished goods. That's one thing. Second thing is you have cost of goods manufactured. Then if you minus any inventory of finished goods, you get a CGS, or you minus CGS to figure out any inventory of finished goods. So either way, so I'm going to put a CGS here, and that's the CGS. Okay, so if you look at the available information, okay, we have to know beginning inventory and CGM and CGS in order to find any inventory. Okay, that's for sure. So do we have a beginning inventory? If you go back to the slide, yes we do. If you look at the finished goods inventory January 1st, we do have 6,000 balance. So I'm going to put 6,000 there. Do we have a CGM? If I go back to the slide, I look around, there's no item called CGM. So I'm going to put a question mark there. Okay, question mark there. So which is something we don't know. Now let's look at CGS. Do we have CGS here? Well, the CGS is A. So if you have A, then you know CGS. Fortunately, we know CGS, which is 31,050. So that's what we have. So now the question becomes, okay, if you want to find any inventory of finished goods, then you have to know all those three values: beginning inventory of finished goods, CGM, CGS, and you get stuck here because of CGM. Now the question becomes, can we find a CGM? If we can find a CGM, then we can go back to find this ending inventory of finished goods, which is B. So now the question becomes how to find a CGM. Okay, how to find a CGM. So how to find a CGM? Of course, we're not going to go back to the ending inventory, beginning inventory, finished goods, because this is a cyclic kind of question. So we have to explore a different way to find a CGM, maybe a new formula or maybe a new process in a process. Okay. So how to find this CGM? So one thing you can think about is, okay, if we have a working process, we have new materials, and we have a labor, and we have overhead, and we have any inventory in the WIP, then eventually we can come up with CGM. So that's actually a perfect formula you can think of. But it's a little bit all over the place because there are so many things you have to consider. For instance, you have to consider we call the beginning inventory of WIP. Do you have it? Then, do you have a production plan? Basically means are you going to put the raw materials? Okay. Are you going to put direct labor? Okay. Okay. And are you going to have a manufacturing overhead? All these costs. Then later you're going to look at your ending inventory of WIP. So if you add the beginning inventory of WIP by the way is a working process, and add that to raw materials, to direct labors, to manufacturing overhead, and all those costs, then subtract any inventory of WIP, then the result is CGM. So the question becomes, do we have each one of them? If we do, then we find a CGM. Once you find a CGM, you go back to find any inventory of finished goods to answer B. So now let's come here to find a CGM. Okay, do we have information to find a CGM? So beginning of WIP, so I'm going to look at the WIP in January 1st. So let me go back to the slide. Okay, so the slide says that the WIP beginning inventory 0, and also likely the end inventory is also 0. So I'm going to put 0 here, okay, and 0 down there, okay, so 0. Okay, so raw materials. Okay, so how much costs for the raw materials? So we're going to go back to the slide, find out the raw materials. Okay, so direct materials used, we're looking at a 12,000. So I'm going to put 12,000 here. So for the direct labor, I'm going to look at direct manufacturing labor, 4,500. Okay, so I'm looking at 4,500. Then for the manufacturing overhead, so it says 10,500. So I'm going to put the 10,000, okay, 500. Okay, sorry, I'm going to write it this way. Okay, so now you can find the CGM by adding the BI of WIP to raw materials to direct labors and MOH, then subtract EI. So now let's find this quantity. So I'm going to add the first one to the second one to the third one to the fourth one. Okay, then I'm going to subtract this ending inventory. So this CGM is 27,000. So therefore we can replace this question mark by 27,000. Okay, so now we can come back to the original question. So what is the cost of any inventory of finished goods? So we are going to use that formula. We add a BI of finished goods and to the CGS, okay, the CGM, then subtract the CGS to find the ending inventory. So this value is going to be beginning inventory of finished goods, then plus 27,000 cost of goods manufactured. So when the products are finished, they will be transferred from the manufacturing plant to the warehouse, and they are available for sale immediately. So we are going to add 27,000 to 6,000. So the total amount is the cost of finished goods available for sale in the warehouse. Okay, then we minus, okay, actually the those are finished goods being sold, CGS, which is 31,050. Okay, then the result is any inventory of finished goods, which is 1,950. Okay, so that's the answer B. I'm going to kind of highlight those values, and these those two values then conclude the answer for case 1. Okay. Alright, so now let's come back to case 2. So case 2 is different from case 1. Okay, the information that case 1 is missing case 2 has, and the information case 2 missing the case 1 has. So basically they're totally irrelevant. So now let's look at the case 2. So case 2, we try to find the value for gross margin, okay, reconstruct the value for manufacturing overhead costs. So these are the two things we're going to fix, C and D. So now let's look at C, gross margin. So I'm going to open the Excel worksheet again, so I'm going to have a different one, sheet 2 here. Okay, let me change this a little bit, make it a little bit bigger so you guys can have can see that easily. So we are going to find C, gross margin. Okay, gross margin. Okay, so gross margin is basically the result of revenues, okay, minus, okay, CGS. Okay, CGS. That's in your income statement. So if you look at the slide, do we have CGS? Yes. Do we have revenues? Yes, we do have both of them. So the question is quite straightforward to find the C. So all we have to do is just use revenues minus CGS. The revenue value is $47,700. The CGS is 30,000. Okay. Okay. So therefore, the gross margin is just as simple as the difference between the revenues and the CGS. Okay, so let me do that. I'm going to put that in red and highlight. So this is answer C. Answer C. Okay, so now we have C. Okay, fixed. Now let's get back to the slide to see the D. D is the manufacturing overhead cost. So what I'm going to do is I'm going to put the use MOH, short for manufacturing overhead cost. Okay, so how to deal with the manufacturing overhead? So manufacturing overhead is only saying in the working process this inventory. So if you still remember what we did with the case 1, the review was for MOH, this only used when you have a beginning inventory of working process, and you have direct material cost, you have direct labor cost, you have manufacturing overhead, then you have cost of goods manufactured, and they will be transferred to the finished goods inventory. The left will be ending inventory of WIP. So that's what you have here. So if we can have all the values or most values in this category, in this formula, then we can find the only left value that we don't know. Okay, so let's go back to the slide to see if we can find all of them. So first of all, let's look at the beginning inventory of WIP. So it's right here, January 1st. So we have 1,200. Okay. So second is, do we have direct materials? Okay, we do have direct material, which is 18,000. Okay, let me put it here. Do we have a direct manufacturing labor cost? Yes, we do, which is 7,500. Do we have manufacturing overhead? Yes, no, we don't know. Otherwise, we don't have to work on this D. Do we have a cost of goods manufactured? Okay. Let me see. Do we have the cost of goods manufactured? Unfortunately, we don't have CGM, so I'm going to put a question mark here. Okay. Because we're looking for this manufacturing overhead, so I'm going to put the in red. So which means that that's something we want to find out. Okay. Do we have any inventory of WIP? Let me go back. Yes, we do have, and any inventory in December 31st, we're looking at 4,500. So I'm going to put the 4,500. Okay. So now the question becomes, well, you have two values missing, and you eventually want to determine manufacturing overhead costs, and now you get stuck here because you don't know cost of CGM. Okay. Because of that, I'm going to look at the CGM. Okay, for the CGM, it's going to be quite interesting because this is kind of something we have done in sheet 1 also. So for CGM, you have to think about what where CGM appears. So we have beginning inventory of finished goods. Okay, then the CGM will be transferred into this inventory. Okay, then if you add them, you're going to have so-called finished goods available for sale. Okay. Then you minus CGS, okay, those goods being sold, then the result is any inventory of finished goods. Okay, so this formula is very simple. Okay, it's very simple. So now we need to find out, okay, do we know 3 out of 4? Okay, if we know beginning inventory of finished goods, we know the CGS, we know the any inventory, we can find the CGM. Okay, that's basically what you can do. So I'm going to look at, do we find out, do we know the beginning inventory of finished goods? Okay, let me go back to the slide. Okay, so do I know beginning inventory of finished goods? Yes, I do have. I have 6,000. Okay, so I put a 6,000 here. Do I know CGM? Of course I don't know. That's what I'm looking for. Do I know the CGS? Okay, if I look at the CGS, it's right here, 30,000. Okay, and let me put the 30,000 here. Do I have any inventory of finished goods? Yes, I do. I have 7,950. Okay, so now it becomes clear. Seems like I can find this CGM. So you have to do a little bit of backwards calculation. You have to add a CGS to any inventory. Okay, CGS at any inventory equals BI with the CGM. So therefore you're going to do a kind of a backwards calculation. I'm going to add a CGS to any inventory, okay, and the value is called cost of the finished goods available for sale. Then you subtract beginning inventory to get a CGM. Okay, so I'm going to do this. So the CGM is 31,950. So I'm going to come back here to put this number. Okay. So now is the time to find the manufacturing overhead costs. Okay. So how to do that? Well, you have to follow the formula. Okay. So and similarly, it's going to be backward calculations. You have to add CGM to the any inventory. Okay. Then minus all the rest you know to get MOH. Okay, so it's going to be the CGM. Sorry, I need to use this number. It's going to be CGM plus any inventory, then minus all the rest you know in this formula. Okay. Then the manufacturing overhead cost is going to be this value. Okay, so I'm going to put the D here. Okay, so I'm going to put them in red. So then you have find the C and the D. Okay, so now both case 1 and case 2 are reconstructed, and all the missing values data become available. Okay, and this is a video lecture for this particular problem. I hope it's good review for you. And if you have any questions, feel free to talk to me, and I'm happy to help you. Okay, so have a nice day, and talk to you next time. Thank you very much for watching.